Shopify is a stock, to me, that's intriguing for a number of reasons. One of which being the performance, right? Over the last 5 years, it's up 240%. Over this same time frame, the S&P 500 is only up about 90%. So it's dramatically outperforming the S&P 500, even when you factor in that it doesn't pay any dividends. Right, and if we look at the all-time chart, which it's only been around since it IPO'd, been around. I've said been around, people didn't know I meant IPO'd. It's only IPO'd early 2015, so this isn't even a full 10-year chart, and it is up 6,480%, right? Which is just phenomenal. And now this can still be a stock you'd want to buy, you'd want to own. Is this going to go up 6,480% over the next 5 years? That would be rather interesting. So, no, it basically can't, but this is still a stock that can do well. I'm assuming most of you know what Shopify does. I'm not going to explain everything on detail, but basically they help companies, they help merchants sell things, right? And that sounds not super great, but it really is, right? Because, I mean, we can see from how much they've grown, their market cap being 150 billion. They probably have a lot of room to grow as well, right? So obviously everyone's trying to sell things better. So Shopify helps accomplish that. They're going to do well, and they seem to have, right? So one thing I would be careful about looking at is this PE, right? And I'm not saying their PE isn't high, because this is high PE. However, it doesn't quite tell the full picture, right? Because Shopify is a company that wasn't always profitable, right? It basically wasn't going to 2022, and I'm sure if we looked at COVID, the numbers would be different. I'm basically just throwing that out there, right? If you bought during this time frame, your outlook might be different. This video isn't necessarily for you. This is more about, okay, where is Shopify at now, right? Because during COVID, right, everyone was selling things online and everyone was just kind of spending a bunch of money because there's nothing to really do. So this is just kind of a weird time frame for the business. Not that you should entirely throw it out, but we are going to throw a lot of it out, right? And just look at, the share price just kind of like as an upward trajectory, kind of forgetting this for a while, right? But it doesn't really tell the full picture, right? Because when you increase profitability by, right? Well, when you lose it by 94% and increase it by 1,725%, and then the subsequent year you increase it 73%. This is indicative of a company that is not fully, it's not like a fully profitable company, right? For example, like TSM, they're never going to be able to increase margins by insane amounts. It's just not going to happen, right? That's just not how it works, right? So a company that is going from not very profitable, of course, revenue is going to factor into this, and it does. But this is a company that still has room to go with margin because they were, for whatever reason, not fully profitable. And oftentimes, it's actually better sometimes to not be profitable, depending on the life cycle of the company, as you want to invest more into advertising and just everything in growth, that sort of thing. And we are moving to a company that is going to be more profitable. Now, is it going to go up 100% again next year? Probably not, right? It's probably not. But this is probably going to outpace revenue for the next couple years, probably. Is it going to dramatically? No. But even if revenue is increasing, this is incredible percentage on revenue too. And oftentimes you will see companies that have revenue this high, you're averaging 21%, they'll have PE multiples that are about this high. That really isn't too uncommon, but especially when you're becoming, increasing the earnings per share, 3 times the revenue as well too. Like that is going to lead, like I said, something like Vertiv that I've covered on this channel before has PE, maybe closer to 70, but if you compound 21 to 25% revenue growth for like 5 years, the PE multiples really don't look that expensive anymore. They really don't. However, does that mean this is a buy? It's a surefire win. It's super cheap right now. I'm not saying that, right? I think high PE companies, they do carry some sort of risk, right? And I've covered this before, but you're more likely to, if there's a recession, these stocks are going to be hit harder, the high PE multiples, not even necessarily because the underlying businesses are going to do bad, but because of the perception around the company. So you will probably lose more in a recession. Also, if the growth were to slow from a 21% to a 10 to 15%, right, you're probably going to lose a little bit on PE as well, because it's no longer going to be treated like a company that is growing insanely fast. So if you factor in those risks, right, you can do really well in Shopify as a long-term hold, right? Short-term, I'm not necessarily seeing this as cheap, but like I said, if you compound that 20%, and who knows, a lot of these stocks do run like that. So I like the business Shopify is in. I like the underlining numbers behind it. The PE is what scares me the most, but as long as your portfolio isn't just chocked full of crazy high PE companies, I wouldn't be too worried about it. And I do like Shopify as a long-term hold. I personally do not own it, but it's definitely a company that clearly is run well. I mean, clearly it's done phenomenal. It's huge now. Let's look at what some analysts have to say. Schwab isn't super impressed. They give it 81%. They think short-term it is overpriced. This isn't indicative of the company itself. They just do a one-year outlook on that. I don't do one-year outlooks. Like I said, I don't know. I don't know enough. I look 3 to 5 years in the future. Morningstar gives it a wide economic moat. So they think it has captured a space that really no one else has or been able to do successfully. So I personally don't know quite enough about the business to say, oh yeah, I certainly agree it's wide, although it definitely doesn't have none. So, and clearly what they've been doing is working, right? So we get 4 stars there, buy, long, buy. Let's take a little bit of a look at the history of the PE, this over the last year and a half or so, right? Yeah, it was unprofitable for a while there, so really not a whole lot, but it looks like 4 PE has bounced somewhere between 60 and 78. So this really isn't the price of it isn't really any more expensive than it has been, at least in the last year and a half. 29 of the 52 analysts say buy, the rest are saying hold, and then like 1 or 2 dudes are saying sell, underperform. It's pretty standard, maybe a little bit more on the buy side of this, but this is pretty standard for a tech company, especially the growth side. I really don't put too much weight into analysts who are right around price targets, which is probably shown. It's done well, and obviously the stock has. So anyways, I think I've covered most of what I want to on this company. I like it as a long-term hold. Obviously, I don't do like a 1-year prediction. I don't say, oh, this is cheap or you have to buy this, because this is not investment advice. But I do like this company. I think it should do fine in the long run. Clearly, it has good leadership and management. I would just be a little bit cautious about the PE ratio. I wouldn't be too over-invested into it, because in the short term, it might not do particularly great. It's possible. I'm not saying it won't, but there is that risk, right? There always is. But anyways, I appreciate you for watching the video. If you enjoyed, I appreciate if you left a like. Subscribe if you're new. I do daily stock content on this channel. And whenever someone subscribes to my channel, I notice a burst in views. YouTube's like, oh, people enjoy this guy, and they recommend it out more. So it means a lot to me if you did that. And if you want to check out other content, that'd be awesome as well. But anyways, I appreciate all of you for watching. I'll catch you in the next video.